Almost every investor is waiting for Cathie Wood's stock prediction. In 2022 alone, Cathie's portfolio had a drawdown of more than 50% because almost all her stock picks and the general stock market went down. But Cathie is very optimistic about these 3 stocks. In today's video, we will look at 3 stocks Cathie forecasted will rally in 2023. Cathie Wood has had a challenging year in the latter half of 2021 and the entire year of 2022 in terms of her stock portfolio. In fact, it's been even longer, as her flagship fund, the ARK Innovation ETF, reached its peak in February 2021. With the recent 2023 rally, investors are wondering which Cathie Wood stocks to buy. Cathie Wood's investments in high-growth technology stocks have made her a fixture in the investment landscape since the launch of her ARK funds in 2014. This can be seen in the process in which she picks her stock. She believes technology and innovations are the future. While Cathie Wood invests in a diverse range of innovative companies, she believes that 3 stocks will outperform the market in 2023. Below are the stocks Cathie is betting heavily on, as well as the reasons for her selections that investors should be aware of. Cathie Wood's third pick is Roku stock, which accounts for 6.77% of ARK's total portfolio. This year, the streaming hardware manufacturer has become a favorite of growth investors looking for low-cost investments. Roku stock has dropped nearly 80% since the start of the 2022 bear market. While the bears have been bearish on Roku stock, Cathie remains bullish on its potential in 2023, even going so far as to say the bull case for the stock is a 3,000% upside in the long term. While the entire streaming industry is slowing, Roku may emerge as a profitable investment. This is due to the fact that life has been different post-COVID-19. Soon in the video, we will talk about how this is a challenge and the way forward, so stay tuned. Roku continues to make significant efforts to attract new customers to its platform. During its third quarter earnings presentation, the company stated that active accounts had increased by 16% year over year, while streaming hours had increased by 21%. Cathie anticipates that Roku shares will compound at a rate of 53% per year. Cathie's model depends on Roku accounts, connected TVs, and daily streaming hours increasing steadily. It also assumes an increase in gross margin to around 59%. Roku faces challenges, but it trades at attractive prices, and the company has a debt-to-equity ratio of 0, shielding it from rising interest rates. A debt ratio of 0 indicates that the firm does not finance increased operations through borrowing at all. Zoom stock ranks second on Cathie's list, accounting for 8.37% of ARK Invest's total portfolio. During the COVID-19 pandemic, the video calling company saw massive returns before plummeting as workers returned to offices and travel restrictions eased. Even though Zoom stocks have suffered since the pandemic's end, Cathie appears to be bullish on Zoom. Zoom's target price for 2026 is $1,500 per share, which is more than 15 times its current price. This expansion is primarily based on explosive revenue growth. According to Cathie's case, Zoom's revenues would increase from $4 billion to $30 billion over the next 4 years. Revenue growth is one of the best indicators to value a stock. Tesla is expected to generate a revenue 10 times the revenue of Zoom. We will talk more about this later. We provide a free educational and data-driven analysis of what is happening in the stock market and the best stock picks from top-performing stock investors. This can take your investing and stock selections to the next level. Kindly subscribe to the channel and click the bell icon to be notified whenever a new video is posted, so you don't miss it. Zoom is currently competing with other platforms such as Microsoft Teams, Google Meet, and Discord. Zoom became a go-to solution for workers and consumers to communicate remotely during the pandemic. Video conferencing is now primarily used for business collaboration after the COVID-19. Because of its size and resources, Microsoft is likely to have a larger market share regarding workplace collaboration. The number 1 stock on Cathie Wood's stock list for 2023 is Tesla. With 10.15% of Cathie's funds, Tesla is the largest single holding. With production ramping up quickly, Tesla could earn nearly $120 billion in revenue this year if current projections are correct. Cathie Wood is extremely bullish on Tesla because of the company's innovative nature. Cathie Wood predicts that Tesla stock will surpass $1,500 in the next 3 years or by 2026. This would result in a 600% gain for Tesla in the next 3 years. Wood's bet on Tesla relies heavily on the company's upcoming self-driving technology development and its ride-hailing service launch. These two events would enable Tesla to run a fleet of self-driving taxis without incurring driver input costs. According to ARK Invest's projections, this business line could generate up to $486 billion in annual revenue by 2026. In conclusion, Cathie Wood is a great stock picker, but that doesn't mean you must follow her stocks blindly. Thoroughly research before investing in any stock to prevent any unexpected losses. As Warren Buffett put it, risk comes from not knowing what you're doing. In the video appearing on your screen, we've made an in-depth analysis of Cathie's Tesla prediction, so do well to check it out.